we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So as we can see here, this is the 1 hour chart, 1 hour price chart. Every candle on this price chart represents a 1 hour trading period. And as we can see here, the share price itself has managed to bounce off of some fairly obvious technical areas that will be covered here in this video. So what we're going to be looking at would be the prior price zones that we were watching for this stock, coming in right around $4.90, and then the ultimate bullish outlook would turn to bearish in the event that we did break below this 61.8 Fibonacci retracement zone, coming in just above $4.40. As we can see here, share prices have managed to bounce right around this upper level here, coming in roughly into contact with that 38.2% Fibonacci retracement zone. And then in addition to that, we also have the this 100 period exponential moving average. So this is the hourly chart. This purple line here is the 100 hour exponential moving average. And we can see that share prices did manage to bounce right from that area. So here, this is a pretty good example of how these technical signals can work in conjunction with one another. Here we have an important Fibonacci price zone, and then in addition to that, the exponential moving average moved right into this area. So we had two different signals kind of working together. This can strengthen a support zone and make it much easier for share prices to start to bounce out of that support zone. So if we sort of drill in here and move in a bit, we can see that we have now overcome this entire exponential moving average cluster. So that is positive because it does suggest that momentum is positive. And if we look at the indicator reading, we can see some additional signals here that start to point in that direction. So specifically, what I would outline here would be this break above the prior downtrend that we're seeing here. In the last video, I made note of this downtrend, saying that there's a very massive slope on this downtrend. So when you start to see slopes that are this sort of extreme or drastic, it becomes much easier for the share price to move upward and for the indicator reading to then break through those levels. That can be the case for the downside or the top side. So here, what we're starting to see is the upward buying pressure start to win out here. The relative strength index, the purple line, is breaking above the yellow line, which is the exponential moving average of the relative strength index. And then in addition to that, you also have this break above this prior momentum trend line. The final point that I'll point to here will be this upward sloping trend line that has been in place since roughly the end of August. So this does suggest that there is still a positive trend momentum that is governing this stock, influencing this stock in the positive direction, and this can continue to support share prices going forward. So it would take a fairly sizable downward movement here in order to break that downtrend. And as we can see here, this is a much more stable sloping line. So it's a much more reasonable expectation here that upward sloping momentum line will be able to continue and remain intact going forward. So what we are seeing here overall is a bit of a recovery after share prices managed to fall back toward this 38.2% Fibonacci retracement zone. As long as this area remains intact, we can say that this is just a healthy pullback and shouldn't be a major cause for concern at the moment. We did see a brief break below that $5 mark, which is going to be important for psychological reasons, sentiment reasons, but share prices really did manage to bounce off of there, as we can see here. So we're seeing near-term highs coming in right around $5.35. And, this is really starting to match up relatively closely to that psychological level, right around $5 per share. So, as long as this area remains intact, I wouldn't expect to see any sizable movements. But if we do see a break below here, that would be a bit more of a cause for concern, because I think at the very least, what you'd be looking at here would be a retest of this 200-hour exponential moving average, which is currently found right around 470. And then if you see a break below there, the next level to be watching would be this 61.8% Fibonacci retracement zone, which comes in just above $4.40 per share. Overall, I don't want to get too ahead of the game here, but if we did actually see a break below that level, then you're looking at a bit more of a cause for concern. You could actually start to turn the outlook to bearish at that point, because I think that at that stage, more than likely what you would be seeing here would be a full retracement of this entire trending move. And then that could send us right back toward that prior support zone that we've been watching for this ticker, which comes in right around 360, 365. So that would be a fairly significant price movement to the downside. But there are some relatively obvious levels to watch here that should be considered now that this more recent share price decline has already broken through the 23.6% fib zone and that historical support region, which came in right around $5.20 per share. So currently we are seeing this lower low right around the $5 mark. It was a brief break below that $5 mark. But as long as this area holds, we can sort of maintain a bullish outlook for the moment. Pulling out to the longer term time frame here, we can see on the daily chart that the next main level to watch really does come in right around this $6 mark. As we can see on these daily candles, this $6 zone really does represent a double top region that has worked as a very significant level of resistance in the past. So of course, the past is no guarantee of what will happen again in the future. But if we do look at share prices going back in time and see what actually occurred after the stock did test this level, we can see that share prices actually did fall back toward that $3.60 low once again. So I do think that one thing people need to keep in mind here for anybody that is actually trading the stock, I mean, again, this is not something that I include in the members only trading session. These public videos, really none of them are. I really have to make sure that those members only trading videos actually generate very strong gains. One thing that I would consider that people should watch out for here is the potential for a longer term trading range to start to develop in this area. So if we do see share prices break, convincingly above, these recent resistance levels coming in right around 570, we do still have to look at this $6 zone as a very significant level of resistance. If we do see share prices fail here, that would essentially mean that we now have a triple top resistance zone coming in right in that area. And then there is scope here that we could actually be looking at a longer term trading range that starts to unfold at these lower levels. So in other words, what I'm saying here, and this is just a possibility, but we could start to see share prices, bounce from this 360 level, move toward the $6 mark, back toward this 360 level, and then possibly back toward the $6 mark again. So, again, this isn't a prediction here based on what we have seen in the past. It's just that, this is common behavior that we have seen for this stock, and it wouldn't be completely surprising, I think, if we did see a price failure into this $6 mark and then sort of a retracement back to a retest of these prior lows, sub $5 level, and possibly even sub $4 level. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.